When banks are doing their strategic planning and they're thinking about how is AI going to affect the way we bank, the way we offer our services, the way our customers experience us, I think there's three primary ways that you're going to see this affect the way banking services are delivered. One's going to be in the way that your customers just interact with you, which is primarily through the digital channel. The second's going to be the way that you drive sales and revenue and products to the institution. And the third, which may be a little bit more controversial, will be the way it affects lending. So first, let's talk about the customer experience with the financial institution, especially in the primary interaction channel, which is digital and through mobile. What you're going to see is AI agents that are predictive, prescriptive, and protective. The way that you get into your car and your maps pops up and it says it's 10 minutes to your house because it knows that previously around that time each day, that's where you go. It's just taking your previous behavior and suggesting that to you so that you don't have to go type in your house's address, right, and go there. In the same way, you think your mobile app opens up and it's going to say, hey, I noticed that normally around this time each month you transfer this amount of money from this account to this account, or you pay this bill or wire this amount or whatever it happens to be. And now these agents would simply suggest these actions to you based upon that. So they're going to be predictive, and it's just going to save time, make it easier, remind you where you just say, yes, do that action, and it takes care of it for you. The second would be something like prescriptive, where it will look at all your spending, all of your deposits, where you have those, and determine, do you have those in the optimal places? Are you earning the most amount of interest you could have? Are you spending with the right card that has the right amount of rewards or points based upon the types of transactions that you're doing? And then suggesting these things to you and offering, for instance, hey, would you like me to move this $10,000 from your savings account to a high yield CD? And then you just say yes, and an AI agent goes out, it'll literally open up the CD, it'll take care of transferring the money for you, where all you had to do is answer a yes or no question and it takes care of this. And the third would be like protective. So it could look and say, I see you have some pending transactions that are going to overdraw your account. It's going to make these checks bounce. It's going to cost you overdraft fees. I'm going to get ahead of this because I have insight into the warehouse. And I'm going to say, would you like me to go ahead and transfer this amount of money into your account to cover these so you don't have an overdraft? For sure. And you just say yes. And then it just automatically moves the money into that account. So that's how you're going to see it interact between the customer and the bank. You're going to see that those AI agents ultimately driving a lot of that interaction, and everyone's going to feel like they've got their own personal financial assistant working specifically for them. There's so much data now available that we're able to take and use AI models on to ultimately predict for your existing customer base which products they are the most likely to buy next. This is going to be a real key to driving sales and revenue, where you will be able to really assure yourself that you're getting the maximum wallet share out of just your existing customer base. And the third thing that I think you'll see AI really start to take over, which may be a little bit more controversial and will definitely make people feel less comfortable, is you're going to see the legacy models of like FICO really be replaced by newer AI-based models. The old models are flawed for a lot of reasons. They don't use enough data points. They're much more stringent. And so when you're able to take AI and look at maybe 10 times or 20 or 100 times more data points and then predict from there, what you're seeing is that they're able to approve higher rates, which is good. And two, they're able to prove that they actually have lower delinquency rates. So what do you want as a bank? To make more loans and have more of and fewer delinquencies. That's what you ultimately want.